Well, we are in a good position. That means, as you said, that inflation is around 2%, slightly below right now, as we expect it to be in the next few months. And we have the economy showing good numbers in the first half of the year. So that's a good position for us to be given everything that we went through in the last couple of years. But we still sit on top of sizable risks, being them geopolitical. The story around tariffs is unfolding. You just mentioned a number of decisions. So uncertainty is pretty much around and prevailing. So we need to be cautious and we need to be and remain committed to meeting by meeting and according to the data to act. Of course, if data goes as we expect in our forecast, we can really foresee some stability in rates in the near future, but there's a lot of things going on, and we need to keep our attention onto that. The major problem I see for Europe is the lack of investment. We really need investment figures to show strength so that the economy can cope with inflation at 2%.
Governor, no doubt that these are very busy times, in particular when it comes to monetary policy as well. But if I pick up on the point around geopolitics, we know that the EU and the US have a trade compromise. The ECB has already been looking at what that means for the European economy. But as you highlighted there, we're getting fresh comment from the White House today in terms of new tariffs. These might not be impacting the EU necessarily, but my question to you is, to what extent can the central bankers expect the European economy to be protected in a certain way, given that the commentary from the White House on new tariffs just keeps unfolding?
Well, you know, we need to follow all developments. I don't see a way that for the European economy to be shielded from global movements. We are the most open economy in the world. We trade quite sizable with all parts of the global economy. So we need really to follow those developments. And I will be surprised if we get some stability in that front. It's not going to happen soon. So that means that even if we are currently in a good position, that doesn't mean that we can downplay the risks. The risks are mainly in the downside, both for inflation and growth, in my view. This is nevertheless good because when the risks for inflation and growth go in the same direction, we definitely know what to do in terms of monetary policy.
There's a school of thought suggesting that it would be wise for the ECB to announce some sort of contingency cut in the near future to temper the rise in the euro. What do you make of that narrative?
Well, that's one of the examples in which we do know what to do. If there is upward pressure on the euro, we do know what will be the impact on inflation and growth. And of course, the ECB, if that is the case, must act. We can look through inflation below 2% for a few months, but it, in my opinion, will be risky to let that process go for a long period of time. And of course, a strong euro puts downward pressure on prices and upward, and also downward pressure on the economy. And our firms will start feeling the heat and the difficulties of a strong euro. And we need to get a way to stabilize the situation, of course.
It is interesting, you're highlighting once again that the ECB can be okay with undershooting inflation for a few months. But my question to you, given the commentary around the ECB being in a good place, What do you expect, therefore, for the start of 2026 in terms of monetary policy?
Well, Sylvia, we have our forecast, and inflation will be below 2% for most of the forecasting horizon, which means that we may be complacent somehow. There are base effects at some point, but consistently below 2% is not our target. We reached a number very close to 2% in 2027 because of the European trading systems tool that, in our evaluation, will have a sizable impact, positive impact on inflation. Without that, inflation will be really below 2 for a very long period of time. We need to take that into account, and again, meeting by meeting, data dependent. That's the stance that we need to keep. Giving forward guidance, even if it's a very light form of forward guidance, it's not appropriate, especially at a moment of uncertainty. Uncertainty does not decrease the probability that we have to move interest rates.
Long are gone those days of forward guidance, Governor. I would also like to get your thoughts on the potential ramifications for the ECB around the debate about perhaps the lack of independence of the Fed. Some suggest that the ECB will have to take a more prominent role in the world in terms of traditional central bank policy. What do you think are the ramifications for the ECB from the lack of or the potential interference in Fed independence?
Well, fortunately, we are in a different position vis-à-vis our colleagues in the United States, but still it's always important to remind ourselves of why is that it is key for us to have independent monetary policy setting. We are here to stabilize prices, to not allow inflation to go above 2%. 2% is our target. We think this is a very important and collectively very crucial measure for the success of our economy. And that is key for Europe. Of course, we need to learn the lessons from what happens elsewhere and be open to communicate better, to reach out both to governments and our citizens on why we set a given path to our policies. And then evaluate the success and how good we are at dealing with inflation. And in my opinion, Europe was quite successful collectively at doing so. So the central banks in Europe are seen as part of the solution and not part of any problem whatsoever.
And Governor Centeno, your time in the Central Bank of Portugal is approaching its end. You've had a long career in terms of being a finance minister, president of the Eurogroup. I'm just wondering, what would be the moment that you would highlight as the most memorable over these years?
Well, if I restrict myself to my time as governor, if you allow me, I'll take two. One was the approval of the transmission protection instrument, the so-called TPI, at the beginning of the hiking process. That was a sign of commitment and of strength of European institutions that favored and actually had a significant impact, in my opinion, in the conditions for financial stability in Europe to avoid fragmentation. This time around, Europe was able to go through the pandemic crisis and the inflationary process without approaching any sort of measurable risks of fragmentation. And the second is, I can define that probably more important for our mission, which was the moment in which we acknowledged collectively that we had passed the peak of inflation. October 2022, 10.6 inflation, and then after that, inflation came down faster than what it went up. And that is, for me, in terms of the success of all these 5 years and the very difficult measures that we had to implement, the moment in which I could look at the data meeting by meeting and see and conclude, look, we did it.